Why are MNCs selling companies in India? We have been seeing a spate of sale of business by multinational companies and global venture capitalists. We saw the sale of shares in Eureka Forbes. We saw the sale of shares in Restaurant Brands Asia. And now we've seen the sale of shares in Agrotech India, or Agrotech Foods as it's called. As far as the first two names are concerned, the stock prices have fallen subsequent to the sale. The sale was done at a price which was market linked, and the stocks have corrected after that. As far as Agrotech is concerned, the sale has been done at a price which is less than half the market price, which means that the market completely failed to estimate the fair value of the company. Graham says that you must buy a company at a valuation far lesser than the price somebody would pay for the whole company. It looks like the market has paid twice the price which a business owner would pay to buy a company. Now, this is a very serious error in judgment on the part of all of us in the market. Why did this happen? I think the valuation of Agrotech was elevated, and the reason that I would attribute to it is heavily concentrated ownership. When a few shareholders corner very large parcel of share in a company, and that leads to a distortion in the valuation of the company, and the company is not traded actively enough, then when a transaction takes place in the company, like the sale of the controlling interest, it can be quite a shocker to the retail shareholders. In this instance, this company has been very sparsely traded, and as per a SEBI guideline, it has been traded below a certain threshold. And because it has been traded below that certain threshold, the valuation can be as decided between the buyer and seller, and the buyer and seller chose to do it at a valuation which was way below the market price of the company. It's quite obvious that the market price is attributable to the non-promoter shareholders and their way of accumulating this share and their way of managing the stock price. It has become a serious risk for retail shareholders when one shareholder goes on accumulating a stock all the way up. In this case, that shareholder happens to be a mutual fund of the hybrid type, which is quite a surprise to me. It is completely avoidable, and I am sure this is a very sad learning even for the manager. But I believe that we have been indifferent to this risk of companies being sold by managements at valuations way below the market price. I don't think the manager or investor who invested in this company even thought of a possibility of this happening. We have taken for granted that the market price shall be the determinant, and buyers and sellers will have to go by what is the discovered value of the company in the stock market, which is an illiquid trade. In the sense, even if the company is traded sparingly, whatever the market decides should be the guiding valuation seems to be our assumption. The market thinks otherwise, business owners think otherwise, regulator also gives them the right to think otherwise. And that's why you have this transaction happening the way it is, and all of us being stunned the way we are. But this is not an isolated trend. In India, many companies are trading way above fair value, and if there is a change of ownership, the business owners will be able to do it provided the share is sparingly traded. Only if this share is sparingly traded, would they be able to put through this transaction? And if the share is sparingly traded, they can decide the valuation as they both mutually deem fit. Today, the open offer in this company is way below the market price. So, today the market price fell 20% and it's probable that the market price may correct further. This incident is a wake-up call for retail shareholders and institutional shareholders. We must not overpay and overvalue companies, because an incident like this in the form of a transaction which involves change in controlling interest can shock and awe us. This is not the last transaction and we should be ready for the next one, because this is a market where those with controlling interests are ready to accept lower valuations, while retail shareholders and institutional shareholders think that the scarcity which they face in buying stocks justifies excess valuations in companies. Obviously, business owners don't agree, and that's why we have transactions like Agrotech happening the way they are. Thank you for watching this video.